Okay, so now we're official. Welcome to Weekly Tax Update for March 1st, 2024, otherwise known as episode 95. Awesome. So I know I joke all the time that we live here in the Chester is where Philadelphia cream cheese was founded. It's where that little dairy first made that nice thick cream cheese. Well, we are also in the Borscht Belt, just south of the Borscht Belt. I grew up in Ulster County, about a half hour from here, where some of the famous resorts are, and now we're starting to see these placards go up to identify important places in the Borscht Belt. So I thought I would share that today. Borscht is beet soup, if you don't know what that is. You can catch me live, Nevada Society of Enrolled Agents, May 15th. In Las Vegas, live in person. Latino Tax Fest in Las Vegas, June 24th to 27th. Also, that is the Agostino Barbecue and the NYU Tax Forum, so there'll be some logistics there. New York, Connecticut Association of Tax Professionals, I am live at their July 18th dinner meeting. And California Society of Enrolled Agents, the 11th and 12th, I'm speaking each day. The use of artificial intelligence and replying to federal tax notices, and weird science if you need your ethics. IRS has a webinar they are doing jointly with the Federal Trade Commission on scams, tax-related identity theft, and identity protection PIN. It's the week of March 6th. Now, they are not offering CE credit, which I think is a mistake. But because it's two different government agencies with government speakers, I think it's worth tuning in just to hear what's going on. There's a registration link on the resources handout. By all means, we suggest you attend. If you're not a subscriber, you should be. $52 a month gets you unlimited access to all of our content, about 30 hours of new material each month, and about 150 hours of material on demand currently available. Jessica Smith is joining us on March 25th so that we can discuss when they owe but can't pay. For those clients who have an unexpected balance due on the return and their first instinct is, oh my gosh, give me an extension. In other words, they're not going to pay you yet. Let's get those people out the door. We'll give you the tools and the options available to get those people to file, probably make you some additional revenue. If you don't want to do rep work, there's still tools here that we're going to give you that allow you to get these returns out the door. Most important part of the end of tax season, catching those last couple of folks. No extensions if you can. So 2024 nationwide IRS tax form dates are still here. Nothing is sold out, of course, yet. Early bird registrations are still open. I want to remind you, last year, Baltimore ran out of hotel space. San Diego sold out early. So must be the best place to go, right? Just thought I would share those two to you. Hello, Wendy. We've started using a resources page, a nice, neat, uniform document. Those are all links on that resource page. It says text, but you can click it and it will take you to the website mentioned in the program. All right, so a couple of thoughts. Now, this came out Tuesday, of all days, and it only compares the February 27th or February 17th and February 16th of this year data. What's interesting here is it's taking them the following Monday. So it's taking them about 10 days to post this. That's actually an unacceptable lag this time of year. But the big takeaway here is that you have 7 less days in the comparison in the filing season. So we're only down 6% on processed returns, 5.7% on returns received. IRS visits to the website are up. Refund amounts are down. Number of refunds are down. That's a lot of refunds this time of year. But these numbers just aren't really statistically valid yet to me. All right. Now, interesting. The web page was updated for processing of different IRS forms, where they are, how backed up they are. and they haven't had much movement. So with this thing updated through March 1st, they are still processing February 2024 1040s. Okay, that's fine. October 2023 amended returns, a full 6 months behind, or 4 months behind. Getting better, but not where we want them to be, right? All right, business returns. Same deal, right? We are processing currently, no movement. February 24 for 1120s, January 24 for 941s. That's to be expected because of the seasonality, the 4 quarters that come in. Form 1041 amended returns have moved up to September, which is not so amazing. Everything else, W7s, 8802s, 1045s, no movement. Form 1139, no movement if you're changing the due date on anything. Now, Form 14039, identity theft, did move up all the way to June of 2022. They are 609 days behind. I'll let you process that. 609 days behind. So we've been having trouble finding staff. Everybody wants to work from home. Nobody wants to tell you where they are when they're working. They don't want to commit to certain hours. Well, what's interesting is this study from Ladders, which is showing that there are less high-paying jobs available remotely, more in person, requiring that you show up. Yeah, if I was going to pay you $200,000 a year, I'd want you to show up too. So I think the trend is finally moving back towards come into work, or, I mean, as far as I'm concerned, you work from home. I'm going to know where you are, when you are. You're going to work 9 to 5. I think we're finally seeing that direction again. So file this under interesting. Corporate Transparency Act podcast from the Holland and Knight law firm. It's just come out. Their first episode is Corporate Transparency Talk, and the attorney is Alan Granwell. He's a pretty good speaker. What I think is that what I find interesting is he's a tax attorney, not a real estate attorney, a corporate attorney, or any of these other drone guys. He's one of us. He has a pretty high-level overview of the act, so this might be review for most of you. And he talks about the aims of the CTA and the whole idea of what the federal government is looking to do here. But I think as issues evolve, this is going to be a good place to hear, right, from a guy who's doing what we do. And not saying accountants shouldn't be doing this either, which I thought was interesting. So it's worth a look. The link is in the resources page. And I downloaded it. I'm going to give it a full listen this weekend because, I got nothing else to do. So you might want to listen to it as well. So The Hill had an article today. Hill is like Politico, right? It's for politic junkies. I just go there for what's going on with respect to the tax bills. I'm starting to think lawmakers love the thrill of a government about to shut down. So we were supposed to shut down Saturday. They voted to delay that. They have a new and improved deadline. So part of their funding is still going to expire next week, March 8th. The rest is going to expire March 22nd. I want you to remember, this is the October 1st, 2023 budget that is still not in place. We've been spending money with no budget. That's what we're talking about. House passed the extension of time, 320 to 99. The Senate passed it 77 to 13. That's about as good as you're going to get with both sides. So where are they with this, with passing this? They say they've got a deal on 6 appropriation bills that are going to expire on the 8th. Military construction, water development, the FDA, and then the Departments of Agriculture, Commerce, Justice, Energy, Interior, Veteran Affairs. So the parks are going to stay open. Veterans Affairs, Transportation, and HUD are all due March 8th. Supposedly there's a deal in place. Well, there was a deal in place for that tax bill too, right? There's a second group of bills that are more problematic because the Republicans in the House are asking for policy riders that are going to change things, and we don't need to get into it. I don't want this to be politics, but they disagree on these six, right? Pentagon, Department of Homeland Security. All right, sorry, on the bottom. General government, legislative branch, state and foreign operations, Department of Defense, Homeland Security, Labor, Health and Human Services. Those bills are all going to be due March 22nd. They run out of funding. Okay. What about the tax bill? Senate Finance Committee Chairman Ron Wyden of Oregon has called on his colleagues to detail their demands for the House-passed tax package. Now, remember, when I say Democrat, Republican, I'm not taking sides. This is how our system works, right? Is this system of the great compromise, these systems of I'll do for you, you do for me. So ranking member of the Finance Committee, the Republican leader and the Finance Committee is Mike Crapo. I love that guy's name. And he has said this is the time to get to yes, which implies they're looking to deal. He's expressed concerns about the bill in its current state. And he says pressure campaigns to back the bill without changes are counterproductive. Translation, I want it to change. The Senate Republicans have said we need to make changes from the floor. That's the only way we're going to get this thing passed. If that happens, the bill goes back to the House. So remember, there's stuff in here that affects 2023 tax returns, and here it is March, and we're still arguing about this. So Mr. Crapo said that he's looking to find agreement with his Republican colleagues onto what everybody needs to get behind this. There's a long list of concerns and wants that they want to have with the bill. The legislation that's passed by the House includes research and development, immediate expensing, full bonus depreciation, and interest expense deductions, the 163J stuff. This is what we've said a year and a half now. These are the things the Republicans want, and we've said the Democrats want to see an enhanced child tax credit. They want to see it larger, higher age. They want to see $3,000, age 17. They want to see an advanced component because the advanced component, they argue, is income to households, and it lifts households out of poverty. So these are the things they've wanted. They didn't quite get all of that. The bill as passed includes provisions on affordable housing, assistance for disaster-impacted communities, and then the funding of these cuts primarily is coming from changing the ERTC cutoff to January 31st, 2024 for all ERTC claims, and further the doing additional, no, I probably can't spell dysfunctional, and additional enforcement that they're working on now. So we'll see where this takes us. Federal Trade Commission had a complaint against H&R Block, similar to the complaints against Intuit last year. Block's accused of unfair practices in its online tax product offerings. And basically, they just made the website difficult to deal with. But watch this. Customers were steered to expensive products, and if they wanted to downgrade, the data got deleted. Well, that could be just a poorly designed database or a poorly designed website. The online system is designed to pressure people into overpaying. Well, they made it difficult to downgrade. I think you have to call. You have to call to downgrade. Data deletion, you had to re-enter some of the data if you were downgrading. That creates a disincentive. Why save $100 when I can live with what you've got? Where maybe they put a nail in their coffin is upgrading if you want to buy the better version, or it turns out I have a Schedule C, I need the deluxe version. Seamless with instant data transfer to the better products and no customer service contact needed. So, that might not be a good thing. FTC alleged that this process was not a glitch, but a tactic. They said this is a pattern of behavior of deceptive advertising. The criteria for free filing was unclear and changed as to what constitutes a simple return. This part is exactly what Intuit was accused of. and Intuit paid a huge penalty, right? You need to define what we're doing for free, or what qualifies as a free return. Legal proceedings and historical context. This complaint is the first step towards a formal hearing. There was a similar complaint against Intuit, and Intuit paid $141 million over their misleading ads, and Intuit also withdrew from the IRS Free File Alliance. H&R Block's chief legal officer emphasized how they behave, and they've been a participant in Free File since 1995, I think, when Free File came out. They're focusing on accurate returns, claims to ensure they have accurate tax returns, which do allow downgrades. This is part of a broader scrutiny of our industry, and it just shows the importance of transparency. The Senate confirmed a chief counsel. We have not had one since the start of the Biden administration. So this chief counsel will lead 1,500 attorneys, serve as the chief legal advisor to the commissioner on all matters relating to interpretation, administration, and enforcement. Mrs. Rollinson is the first woman to have this role. Marjorie Rollinson, I guess I did give you her name. Spent much of her career at Ernst & Young. She retired just before getting this position, and she previously worked for 5 years in the office of chief counsel. So it's very nice. For those of you that can't see this, it says crap, that's due when, and it's got Thomas Jefferson on it. All right. Because it's that time of year, right? All right, the IRS enhanced their Where's My Refund tool. I don't know how much we use that. Maybe if you have the occasional client who calls up and says, I didn't get my money and whatever. So the tool has better messaging, works more seamlessly on mobile devices, and of course they can see live up to 3 years worth of tax returns, because non-filers should know when their refunds are coming too. I'm only mentioning the following program in case you get questions from clients or payments. U.S. Department of Agricultural Discrimination Financial Assistance Program. So there's a fact sheet out there that's really just their webpage with some FAQs on it. Fact sheet 2025-05. There is a link to this in the handout. Program was created under the Inflation Reduction Act to assist affected stakeholders, farmers, ranchers, landowners, that were discriminated against in USDA lending programs. Discrimination, of course, can be based on race, color, national origin, ethnicity, sex, sexual orientation, gender identity, all these usual things that the federal government says are a cause of action for discrimination. Now, what about the money we get paid? Well, payments from the program are includable in gross income, right? Everything is taxable unless there's an exception. Attorney's fees, though, because it's discrimination, can be deducted above the line. You can net them on line 8. Whether the payment is subject to self-employment tax depends on whether they were, for example, a Schedule F or a Schedule E. Was it a rental activity? Was it a passive rental activity? Was it a trade or business? All right, FinCEN has a new rule and a new thing that our attorney clients are going to have to follow. Now, thank goodness this doesn't apply to us. We're not going to run a class on it, I don't think. But I want you to be aware of this in case your attorney clients ask you or your clients ask you, because they may get confused with the Corporate Transparency Act. This is something different. Under the anti-money laundering regulations for rental real estate transfers, we're now adding 47 pages. They were just in the Federal Register. There's a copy in the handout. FinCEN has made a proposed rule, and they want to require certain persons involved in real estate transactions to submit reports and keep records on who was involved. If there's a non-financial transfer, so when money changes hands or there's a mortgage, there's recording. But what if we have transfers to specified legal entities and trusts? They now want to have a nationwide database. Very interesting. The Corporate Transparency Act is not collecting data on trusts, but this rule will. Transfers made directly to an individual are not covered by the rule. Why? Their name is going to show up in the public database as the owner of the property. The proposed rule describes circumstances in which a report has to be filed, who has to file the report, typically the attorneys or the trust company, the information that needs to be provided, who the owner is and potentially how they paid for it and what they paid for it, and the deadline for when a report is due. I suspect the report filing deadline is going to change several times, just like it did with the CTA. And again, they're going to build a database here to chase down people that are trying to launder or hide money. So the IRS has a promotion out this week about 1099-Ks with incorrect information. And look, their big thing, as always, which, when I always thought this was no big deal when I first started doing taxes, I'm like, of course that's what you do. Then you find out that nobody can get it done, right? The big thing is that I should request a corrected 1099, right? That's always the number one thing. Say to the guy that gave you the wrong one, yo, fix this. Example, I get one for $20,500 that's not taxable income. What should I do with it? This is why I'm speaking about this. I have been saying for years, you can't do the hokey pokey. And what are they telling people to do? The hokey pokey. If you have an error, put it on 8Z and then back it off on 24Z. Just say error, right? I can just see Frank Agostino. He'll say that much better. The error. It was an error, government. But yeah. And this is supposed to give you your net effective zero. Dangerous precedent, right? But they're only talking about it in the context of a 1099-K. The link to the FAQ is included on the resources page. IRS announced a new effort against high-income non-filers. So they have 125,000 cases identified of folks who earned above $400,000. That is the magic number that they have said. They will not increase the number of audits on people who earn under $400,000. That must mean that we are going to chase after people who make more than $400,000. And it seems to me that if you know who they are and they made that much money, you didn't need a program to do it. These are the people you should have been going after to begin with. So they have 25,000 cases of people with over $1 million of income and no tax return. They have 100,000 cases of people between $400,000 and $1 million. That's 125,000 non-filer cases. That should keep the AUR unit busy for a couple of months. They're just looking at 2017 to 2021, which is interesting. I would have thought they would have dropped 17 because they have that 6-year enforcement rule, right? That policy statement, 18, 19, 20, 21, 22, 23 is 6 years. So it's interesting that 17 is in here. They're using third-party information. What are they talking about? They're using the transcripts to identify who should have filed. This isn't even, we think you have a business or where have you been. We know you didn't file. We have your documents. It's insane that they have to make this into a program, that this isn't something they've been doing for years. Commissioner Werfel emphasized the importance of filing returns as a civic duty. He took a step back here that he's making these nonsensical statements. With new resources, the IRS wants to be fair in compliance. That sounds like fair and ensure fair tax compliance. That sounds like Fox News. Potential revenue, unfiled returns involve financial activity of over $100 billion. Yeah, there's some tax in there, unpaid tax. They're going to open up these cases with a CP59 notice. That's that soft notice. Hey, we think you needed to file. Where's your return? Usual penalties. Immediate action is encouraged. Bill says, I have seen 1040 SFRs through tax year 17. Has anyone seen one for 18 and forward? I have not, but that's also because SFRs were pretty much turned off, I think. Non-filers are urged to review their situation, file missing returns, get help if they need it. You might be owed refunds that you're not going to get, right? And of course, the next target is large corporate partnership and other individual filers. They are using AI to go after millionaires. All right. Consequences of non-compliance. I won't put you to sleep, But Bill, there's your SFRs, right? Urgent call to action, and this is part of the larger IRS strategy. So the IRS focus on cryptocurrency and digital assets, and their spending of the Inflation Reduction Act money continues. So they hired an attorney and a CPA who are large thinkers in digital asset areas. And Raj, I can't even pronounce his name. 10 years as a tax executive, extensive experience in compliance and reporting for financial institutions and the crypto industry. They brought in an outside guy. He was the former head of tax at a blockchain software technology company. He should know what's going on. Seth Wilkes worked for 6 years in digital asset tax policy. He has experience with multinational corporations, focusing on tax compliance, planning, and cross-border transactions. I don't know why they didn't hire that guy, Bankman-Fried. He knows a lot about what bad people are doing with crypto, right? They could have put him right to work. All right. I'm hearing ATX is supporting Form 8283, Shelley. So, all right. Strategic importance here is Werfel is saying that the sector's complexity and tax administration implications are complex and they are strategically important to the IRS. The goal in hiring these executives is to build out a digital asset management systems that are beneficial for taxpayers and the nation. I think the nation first. IRS's priorities here are design effective reporting systems for digital assets, focus on improving employee capacity at the IRS, give them access to tools to manage digital assets, and of course, it's funded by the Inflation Reduction Act. They have that juxtaposition right now of we need to spend the money before they take it away. Congress is taking away ERTC money, which you would think it was a golden goose they wouldn't touch. So would they come after that money to spend it on something else? Yeah. All right, this is an expansion of work on digital assets, including the John Doe summonses that were issued in 2015. They're working on definitions of digital assets, and of course, all of these returns, all return types currently have crypto exposure, crypto questions. On an exciting note, and I didn't give you the link to this, Rita Ryan did a video on this on LinkedIn for her firm, Wolf & Company. If you have clients that need to file Forms 1042, they are exempting them from the e-file requirement that was supposed to roll out this year. So both U.S. and foreign withholding agents are able to paper file this year without penalty. Previously, they were supposed to be penalized per document. So again, that's important. All withholding agents for Form 1042 are exempt, including those with over 100 partnerships with over 100 partners. That was a flagged target group, and they are waiving that. The big problem has been that apparently there aren't enough providers lining up for people to do this. And there have been some, for the providers that are out there, they've been having difficulty interfacing with modernized e-file. So the government said, you know what, maybe you should paper file these things. I think the next step, by the way, might be, as you get closer to the deadline, that they grant an extension of time, because I don't know that people have they were planning they had the e-file. They may not have the software to be able to print these darn things and get them out to people. So we'll see what happens. And really, that's it for today. Remember that our friends in Congress were off for 2 weeks, and then they spent this week making sure the government didn't shut down this weekend. So not a whole lot happening, but everybody have a great weekend. If you're not working, good for you. If you are working, stay strong. Pookie's home for spring break, so I'll go out to dinner with her. Everybody else, see you next week. Thanks for attending.